Alright everyone, let's get this going, let's get the news flowing, and let's get those portfolios growing. Gonna be a quick show tonight focused on technical analysis for the last week and what to expect in the upcoming week. Before we get started, we wanted to say that this is a YouTube channel that will not paywall all of its content and include video sponsors for, let's just say, exceptional companies. So, unless Warren Buffett himself asks us to advertise for Berkshire Hathaway, you're probably not going to hear sponsors from us about Sam Bankrupt fraud. Without any further ado, let's dive right into the astrology for this week's stock market. Apple delivers blowout earnings. So what's the bullish case here? The iMob is at it again, shaking down the App Store subscription for that juicy 30% profit for no work. iPhone sales beat expectations by about $2 billion, another good sign. But how many people do you know that are still buying iPhones? More and more, I see people switching to Android, most likely because we are in a period of monetary tightening and those bank accounts are running empty. But what are the tarot cards telling us? Let's take a look. From the 15-minute perspective, we can see Apple opening Friday with a massive green erection followed by muted action for the rest of the day. That's a good sign for the bulls. But what is the bearish perspective? Looking at the daily chart, we erupted past the Bollinger Band, a measure 2 standard deviations away from the trailing 20-day move. Zooming out, we can see a divergence in the RSI. We can see something similar to this that played out back in mid-February. RSI diverged, and this was followed by a pullback in Apple's price. MACD crossing over more than the neural wiring of a Wall Street's bets trader, but also in negative divergence. What else is going on here? If we look back at August of last year, you can see we're approaching that previous high off the big move. Not only this, but we're just 5% off all-time highs for Apple's stock during the unlimited money era. So, is this the time to YOLO into zero DTE calls? Well, let's just say if you do, you're probably going to wish your mom swallowed you instead. So, how do we play this? I'd watch for consolidation and testing of that August high before we break through. If the stock has another strong move past in the next few days, I'd be very cautious of a fake out as those market makers try to get you to buy options before they send the stock price plummeting. If this doesn't happen, we could see a pullback to the 170 range. It's important to keep in mind that it is not uncommon to see a massive move up after earnings followed by a pullback for the rest of the quarter. Moving on to the NASDAQ. Big tech, what are we looking at? Not much to say here. Big moves Thursday and Friday off Apple earnings and a fantastic JOLTS report that will inevitably get revised down. The Qs are still range bound, reaching the top of that range to test highs another time. This happened off weak volume. That's a good sign. Bulls better hope for an after hours gap through of the resistance at 323.50. Otherwise, we could be looking at a pullback to stay in that range. If we look at what the options market is pricing in for the expected move for Monday, May 8th, we can see that the upside the market is pricing in is 0.6% move. 324.81 on the upside and 320.97 to the downside. If we look at the weekly expected move, we can see the market is only pricing in a 1.5% move. Does this mean the stock won't move beyond 1.5% in either direction on a given day? No. This means come Friday, if the market makers want to be eating that steak and lobster dinner with their 21-year-old wives, they're going to have to close the market Friday within that range.
Now on to our favorite, gold. You see, gold is the mature guy in the room, or so I've heard. And if the NASDAQ is the freshman fraternity pledge, gold is the 6th-year communications major. And currently, gold may have actually put in a rejection candle on Friday. Looking at the daily close, it appears to be a shooting star candle. And while we don't necessarily condone astrology, there is some important psychology to a candle like this, and it's something we should take note of. So if you're looking to scalp a decent gold trade, in honor of the 1977 bear market, the 1977 range would be ideal for temporary support. And we're expecting some volatility from gold in the near term, so be careful trading this old man. And lastly, moving on to our favorite decentralized Alphabet Boy sponsored currency. You betcha, I'm talking about Bitcoin. We continue to see the funny dichotomy that is Bitcoin. You see, the street loves it and most of the big boys hate it. But lately, we've been seeing a lot more mainstream media slam pieces coming out against Bitcoin, with the most recent example of this being the New York Times, which slammed it for the electricity requirements in the mining process. Now, I don't expect these pieces to have too much effect on the price, but keep a lookout for government climate initiatives or mining limitations regarding this, because they're always on the prowl for scapegoats. But I digress. Looking at the daily chart, Bitcoin's trading in a self-imposed range from around $27,000 to $30,000. When we expand a look at the data from 12/1/2020, we can clearly see that 30,000 was a pretty strong support for Bitcoin during 2021 and 2022. So with that stated, we think Bitcoin's probably going to have a hard time getting over the 30,000 mark, and it's going to take a pretty strong volume push to move it clear out of that range. And that's probably going to require a catalyst. So the question we start asking is, where is the catalyst? Is it going to come from mom and pops? Probably not, because mom and pops are running out of dollar bills. Is it going to come from banks? Also probably not, because banks are running out of dollar bills. So is it going to come from the Fed doing a pivot? That we think is the most likely option, but it's probably not going to happen in the near term. While Bitcoin has been on a tear since January, in the near term, it's like we said, just channeling. The MACD has been downtrending on the daily and it's pretty much flat now. So we need this big volume push, or else it's gonna look like it's gonna fall to the downside of its channel, and that would make a really good scalping opportunity.